This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. You're watching us live from the CNBC TV 18 Motilal Oswal studio. I'm Sonia Shenoy, and as always joining me is Nigel D'Souza as well as Surbhi Upadhyay. Guys, interesting day, interesting last 24 hours actually. Some amount of volatility has kicked into the market. Little bit of caution as well. So it's been a slightly weak start to 2024. But let's see how it goes. We have big gains under our belt as well.
Well, that's right. Volatile start. You know, on a day-to-day basis, you're seeing the intraday 50-60 point downtake and then the pullback as well. So let's see how this goes. Wednesday, middle of the week, I don't know whether the bulls want to come back and fight today.
Global markets
have they come back from holidays? I don't know.
I think
maybe that's the problem.
I think they're getting back, and global markets have woken up with a hangover. So we have that to deal with as well. At least we preempted the fall, but I think across the board, the start to the new year has been, oh, okay, wow, now we have to get back to work. Yeah. That's the feeling when you're looking at all the red screens around, and we'll talk about that. But let's see. I mean, the good thing is that the buyers are still coming in, so dips are getting bought, and I think that's what we've seen in the last 48 hours.
When Surbhi said, "Ooh, we had to get back to work," I think it was a personal one.
Well, markets at times reflect your mood, right?
So. They do, and aren't we all, right? I mean, the first week of the new year tends to get a little tiring for everyone after all the festivities. But be that as it may, we have lots of cues to track this morning, so let's get straight down to it. There is a lot of volatility in the market, and you can see it both in our markets as well as across the globe. Last evening, in fact, the US markets ended very, very mixed. The worst of the lot was the Nasdaq, which was down 245 points overnight. Otherwise, the rest of the markets were just about okay. For our own markets, the Nifty consolidated, but there was a negative bias in trade yesterday. The good part is, towards late trade, the dips got bought, and we recovered from, the lows of trade, especially in pockets like pharma, etc. The dips are getting bought, so that is a good thing. FIs bought about 1,600 crores in the cash market, so that money comes in. But there was large selling from DIIs, almost 2,000 crores. So just a little bit of caution entering the system now. Let's see how it plays out. Apart from that, if you look at it, rate sensitives are now seeing some amount of profit taking. They were the big movers in the last quartile of the calendar year, 2023. But now a little bit of money being taken off the table, which is not a bad thing. Autos, banks are seeing some profit taking. In autos, in fact, the numbers have also been on the weaker side. This morning, Hero MotoCorp will be reacting to its earnings, to its sales rather, where there's hardly been any growth in the December sales this time around. But the space to be in for the last, a couple of days has been pharma. A lot of pharma names sitting at fresh 52-week highs. So I wouldn't be surprised if there is some incremental buying in many of these names. Now, there are a couple of things in focus today. The Adani Group stocks will definitely take center stage as the Supreme Court will be delivering the verdict on the Adani Hindenburg case. So there could be some sentimental reaction over there. We'll, react to that closer to time. But apart from that, if you look at what's happening across the globe, not only are the equity markets a bit volatile, you have the currency markets and the commodity markets which are volatile as well. So crude prices are all over the place. The situation at the Red Sea remains a bit tense now with, the latest updates from Iran, etc. So that has put a little bit of pressure. Brent crude, in fact, now at $76 a barrel. But let's see how it goes this morning. The GIF Nifty indicates that the start will be on a slightly weaker side, so about 80 points lower after what we saw yesterday.
So plenty of caution across the board that we're seeing. I mean, just to take off from the point you made on Brent, I mean, yesterday there was so much news coming in. There was negative news on the macros because fundamentally speaking, the Chinese factory data, at least the official numbers, they were weak. The Eurozone PMI numbers are showing contraction, 18 consecutive months of contraction. So the macro numbers have been weak and there's a question mark on demand. But then you have the risk premium, geopolitics. So yesterday, a couple of things happened. First is that Maersk pulled out of the Red Sea. I mean, Maersk was showing some sign of trying to get back in, but one of their ships came under fire and they said, we're out. So that was one. And then Iran went ahead and deployed a destroyer in the Red Sea, and that suddenly got everybody to take up notice. So intraday there was, that fall, that rise that came in, but then the fall came in because of the weak demand positioning. That's on crude, but the bigger issue is now we're getting global markets back. So what's the mothership doing? The mothership decided to fall off yesterday, particularly the Nasdaq. Apple tumbled 4%, and that's because of the Barclays downgrade. Barclays saying that demand for new iPhones, etc., is not that great. And that the street took notice of that, though volumes are even thin on Wall Street. So when you take that with a pinch of salt, but the fact is the Nasdaq sold off, these big tech stocks sold off. And then let's talk about the US bond and currency markets. Even there, the start was quite bearish. The 10-year yield started the year 2024 with a rise of about 9-10 basis points, moving to above 3.9%. Remember the last week of 2023, we kept saying the yield is about 3.8 thereabouts. So there's a rise that came in, not just on this, on the dollar. Dollar was a bigger mover, actually. The dollar fell 2%, the DXY, in all of 2023. Yesterday, in one day alone, the dollar was up 0.9%. In one quick swoop, it made that move to 102 plus. Even this morning, 102.16 is what we've got. So again, I'm taking this with a pinch of salt till we get more cues. And the cues will come in this week because we have the non-farm payrolls data on Friday. We have the Fed minutes coming through as well. Then we have the private sector employment report, the ADP report on Thursday. So there's plenty of data and more participation. So I think by the end of the week, we'll have a clearer narrative in terms of what is the directional call that the US market is taking. Coming to our own market, as we've been saying, perhaps we've kind of preempted a bit of this fall. The recovery from the lows was very heartening for the Nifty, not so much on the Bank Nifty. And I think that's where at least I'll be completely focused on what the Bank Nifty does next, because that remains the most volatile and most vulnerable part of this market. Just some levels. I'm watching out for the lows of the last couple of sessions quite carefully because there's been this interesting, drama around these levels. December 31st, that's when the market showed the first sign of halting. The low was 21,676. January 1, we were still around that vicinity of 21,680 thereabouts. Yesterday, the intraday dip was far sharper. We broke the December 31st and Jan 1 lows, fell all the way to 21,550 thereabouts. But then we recovered from there to close again just around this level of 21,670 to 680. Question is whether we can, retain that. I mean, and for reference, the 20 DM is still lower from where we are. But I think it puts us in a very, interesting and slightly delicate position given the volatility that we've seen, Nigel.
Well, global cues as well, a little bit sketchy in the last few days as well. Things have been quite volatile. But for me, the Nifty Bank holds the key for today. It was the pain point yesterday. It didn't pull back even when the markets pulled back. And today it plays out weekly expiry. So that's going to be the most important index for the day. And obviously, it has the fair bit of weightage out there. And in the last few sessions, quietly, the Nifty Bank has actually corrected. It's corrected closer on 1,000 points. I'm looking at the highs that we saw on 28th of December and yesterday's lows as well. A clear 1,000 points, that's more than a 2% pullback is what we saw on the Nifty Bank. And it's very, very close to around the 20 DMA. If it wants to support that, take support out there and see a bit of an intraday bounce as well, then maybe a long trade will help you in terms of the Nifty as well as the Nifty Bank with your stops in place as well, because it's very, very close to the 20 DMA. Yesterday as well, the Nifty Bank was low and you had a big open interest build up, telling you that shots are getting piled on the Nifty Bank. As I always say, shots getting piled up on any index is not such a bad thing because that gives you an additional reason in case there is a bit of a short covering bounce in store. How the FI is positioned though, they continue to remain net longs. Yesterday they added mild net short positions in comparison to net longs, though currently the positioning is still 68% to the long side, short side at around 32%. Options data comes up for you on the screen on the Nifty. 21,700 call, the 21,500 put. Both of them fairly active in yesterday's trading session, which brings us to the levels. The recent high, a few sessions ago, we saw 21,834. That's going to be the important resistance zone on the upside. Though on the downside, yesterday we took support at 21,555 and we bounced up there. Looking at yesterday's low, looking at the options data as well, that becomes a crucial support zone, 21,500, 21,550. If that level breaks, then maybe we want to visit the 20 DMAs, which is 200 points lower from there. The gift Nifty suggesting a pullback, you're going to be starting closer to yesterday's low. So in case, you have the appetite, you want to put a 50-point stop loss from around the 21,500 odd mark, maybe intraday you see a bit of a recovery. Whether it sustains or not, that time will tell. But the Nifty Bank, that's the most crucial one today. Has it corrected this 1,000 points? And does it want to pop up a couple of 100 points? Let's see whether that happens. But that's the crucial index for the day. Didn't recover yesterday, holds the key for today.
Okay, well, let's also take a quick look at what's happening on the rupee. So yesterday, just pull up the rupee. Yesterday, the rupee closed at 83.32 to the dollar. There was an interesting Goldman Sachs report that came out which suggested that the rupee may see a lot of strength in 2024 and may rise to 81 to the dollar amidst robust inflow hopes. So that's the Goldman Sachs report. But there's also a view that we're getting on the rupee this morning. Kunal Sodhani of Shinhan Bank says that the dollar index recovered significantly as yields rose and saw a risk-off market mood strengthening its position against peers. The December jobs data in the US will define trends. Oil prices cooled off as well. Flows continue to dominate the dollar-INR pair, and he sees 83.20 act as a support, while 83.40 acts as a resistance.
Okay, on bonds, Neeraj Gambhir of Axis Bank says during the week, 10-year benchmark yield traded in a narrow range of 7.17, 7.21% in absence of any domestic cues. The 5 and 10-year GSEC auction results came in better than expected as participants remain confident about FPI inflows in January. RBI announced the fourth quarter of 24 SDL calendar to the tune of 4.13 lakh crores, which was higher than market expectations. On the global front, bonds remain in a narrow range due to the year-end holiday season. Neeraj is expecting that the 10-year benchmark bond yield will trade in a range of 7.15 to 7.25 ahead of the FOMC minutes, as well as the non-farm payrolls data, which comes out later this week.
Well, that's about trade setup, but we got plenty of stocks that we're going to be tracking for you in a special top 10 segment. So let's run you through the list. We're looking at Shah Metallics, Hindustan Zinc, MOIL, VST Industries, Strides, Yes Bank, Bank of Maharashtra. All of them will be reacting to positive news flow, while on the flip side, Hero MotoCorp, Avenue Supermarts, CSB Bank will be reacting to negative news flow.